Hey, what's up, guys? Kenny, Senior Research Analyst with the MiniAnalyst.com here. First thing we're looking at here is a chart of the market, the Mini S&P 500 futures contract. We had mentioned last week about this time, we had seen this nice bounce in the S&P 500 futures, and we were right around 2720-ish, and we were talking about this massive level of resistance in the market. We were actually above all key measures of trend following support resistance, but a lot of people weren't aware of this level of massive resistance. So we were a bear among bulls. We had mentioned that to you guys. In fact, if we go ahead and look over at the Mini S&P System 1.0, we were right here at 2715. So we were talking about the market there. Definitely on the bearish side, we're going to be looking for some short setups in the disk. Nothing really came to fruition. That being said, S&P System 1.0 actually went ahead and booked around $1,600 in profits, so it exited the market yesterday before the market sell-off. But if we go back over here and look at the at where we were, we had this level of massive support resistance. We've come down now, so we actually need to have an indication here at 2715. When we got down to about 2712, 2715 to 2717 is a massive level, the be-all end all of trend following significance right here in the 200 EMAs and 200 SMAs. So monstrous support right there. In fact, in terms of the disk, the DSC and the DSC DT, we would definitely be looking at taking a Marty short exposure. So we just had a Marty short setup, but we did not take it because, again, we have this monstrous level of support from a trend following perspective. So that being said, we are still officially market bullish on the market around 25.85 a couple of weeks ago, and this is just another buying opportunity. This is another opportunity to add to that exposure. Now, we don't really have any, actually we did have some more long setups. So the boost actually went long again today. It booked some pretty impressive gains on that last move. Went long the day after and actually went long again today in the EMD around 1880. So that is some long exposure. The crypt, unfortunately, had its position exited yesterday in the big market sell-off. About midway through, it was stopped out. And if we look at the, so this is where we were talking. Now, of course, these dashed lines are exposure that's not been exited, so that's where we're talking. So we definitely need to to adjust that because we are no longer up there. So the doubler has really not been trading, hasn't found any opportunities. The player from an intraday dynamics perspective, definitely bearish. Look at all this red over the last 1, 2, 3, 4 days of sell-offs since we had that video talking about being bearish among the bulls. We're now bull among the bears. So we've had some marked sell-offs, and it's extreme bearish exposure or bearish intraday dynamics. Bearish, just meaning we're just getting. Yesterday was kind of a capitulation, though. That was a pretty marked sell-off as we broke 2660. Everyone realized that we were headed straight for 2612 or 2615. That's where we went straight to. In fact, we're trying to hold the lows again today. From a technical perspective, definitely a great opportunity to add to some bullish exposure in the market if you're interested in doing so. From the intraday dynamics perspective, it's definitely still pretty bearish. So from a DSC perspective, definitely not going to be adding anything to the markets just yet. So if we look at the track of the DSC, we see that we're still sitting at 59% in gains for the month. Hypothetical, yet real-time and live. And what's interesting is we actually have... so we're going to do something a little different. Boost is very... Not many people can have can afford a $50,000 drawdown, even though you're making about 6 figures a year or so with those drawdowns. So what we're actually looking at doing is introducing the MACE. And what this does is this has a much lower drawdown, much less profit potential, 150 versus 470, but just a $14,000 drawdown. So we've actually put that in the platinum. and replace the boost with the platinum. So instead of the platinum having a $50,000 max drawdown on 1,450,000 over the last 10 or so years or 15 years, you now have just a max drawdown of 31%. All of our profit factors still around 2.25 to 2.5. So very excited about going and adding the MASC. The boost will still be offered, but it's just so, there's the boost right there, $38,000 in drawdown, $470,000 in profit. But again, not very many people can do that. We're still going to be offering the boost if you're interested, but kind of about a third of the exposure and makes about a third of the profit with the MASE. So if we look at the home page and we go to the video, we should have disabled that. If you guys are interested in subscribing to these portfolios, MADSC, MADSCDT, the Marty, which just had a short setup, but again, we're not going to take it. So it's very interesting to see how the market plays out today. We've got this technical bounce that we should be expecting. That being said, it is the second test of the be-all trend following significant 200 EMA and SMA. So we're definitely going to get a bounce. If we get a flush out and a reversal, obviously that'll be pretty impressive. Go ahead and add an opportunity to go ahead and add to the bullish exposure. If we break down and we just don't do anything, we'll have to see how it plays over the next few days. But if you guys have any questions or want to get started auto trading with any of these portfolios that you've seen here today, you can live chat us on the website. Shoot us an email to admin@MiniAnalyst.com, and you can get these trades to your text, to your phones, to your email, you can auto trade them to the broker, whatever you're interested in. So hope you guys are having a great trading day, and we will see you next time.